Welcome. In this video, can ZBCN coin go up 3x? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
One of the most structurally notable formations on the chart is the rising channel formation, which is currently presenting a very positive technical setup that has captured investors' attention now that the price has turned upward. This rising channel is defined by two parallel lines showing upward movement at a certain slope, with the price intermittently touching the midline, lower band, or upper band to redefine its direction. These kinds of channels not only help us understand market structure more clearly, but also show that the price is fluctuating within certain boundaries. In the current scenario, the price has reached the channel's midline and then received a positive reaction from that point. This is a highly important technical signal that the market structure remains strong and healthy. Generally, in trend channels, the midline is considered a point of rest or correction. When the price reaches the midline, it tests the strength of both buyers and sellers. If buyers dominate at this level, the price reverses upward and starts moving toward the channel's upper band. Thus, the current upward move from the midline clearly indicates that the ongoing uptrend within the channel is still valid and that the market's upward momentum remains intact. Rising channel structures are extremely critical and reliable tools in technical analysis for determining the general direction of the price. The primary advantage of these channels is that the price typically moves within defined limits and provides possible support and resistance levels within that framework. The midline, in particular, functions as a gauge for price movement rhythm. It can serve as both a point of rest and a point of momentum gain within the symmetric structure of the channel. If the price holds at the midline, the likelihood of a bullish breakout increases. A break below it would suggest trend weakening. In the current case, the price's upward response after testing the midline is a very positive technical development. Moreover, the psychological aspect of channel structures is also extremely important. Investors often use the lower band of such rising channels as a buy point and the upper band as a sell point. While this strategy can be successful at times, the real gains usually begin when the price separates upward from the midline. In these situations, the next target becomes the upper band, providing medium to long-term profit opportunities. Currently, the price's upward move from the midline shows it is accelerating toward the channel's upper band. This suggests investors should maintain positions in line with the trend and focus on new opportunities as the upward momentum continues. Additionally, this structure becomes much more meaningful when supported by volume analysis. If the price moves upward from the midline and volume increases simultaneously, it indicates buyers are strongly present in the market and that the sustainability of the rise is increasing. In this situation, it's possible to say that the upward pressure is not only technical, but also psychological and emotional. Increased volume shows the market takes this move seriously and that many investors are taking positions accordingly. In the current chart, a similar situation is observed. Volume has risen alongside the price's move up from the midline, indicating strong market support behind the rise. Another important aspect of rising channel formations is that the small corrections that occur within these structures often foreshadow larger upward moves. Therefore, each dip toward the midline can be viewed as a potential buying opportunity. Corrections within a rising channel are usually just part of the main uptrend, and once they complete, the price reverses upward again. One of the most reliable strategies in such situations is to carefully observe whether the price finds support at the midline. If it does, and then gains upward momentum again, opening a position at that point becomes technically safer. The fact that the price is holding above the midline and continuing upward from this point is both a technically and psychologically strong signal. The upper band of the channel acts as an important resistance level in these formations. When this level is reached, the price may pull back from the resistance or break through it strongly with volume, launching a new upward trend beyond the channel. In the current situation, we see the price gaining strength above the midline and maintaining upward momentum. This indicates a high probability that the price may move toward the channel's upper boundary in the short term, and that this boundary could be tested soon. In conclusion, the price's upward reaction after testing the midline within the current rising channel formation is viewed as a very important and positive development in technical analysis. The continuity of these kinds of structures depends on the stability of movement within the channel. At present, both price behavior and market structure suggest that the uptrend is technically supported and could continue to the upper band of the channel. During this process, it's crucial for investors to remain cautious and closely monitor both the channel dynamics and other technical indicators. Reaching the upper band of the channel will be a critical threshold for both short-term profit realization and a test of the strength of the trend. But you can't base analysis on just the channel. Let's look at the other metrics too. Stay tuned.
One of the most structurally significant formations on the chart is the cup formation, a pattern frequently encountered in technical analysis and one that captures investors' attention. This formation typically develops after a prolonged downtrend, where the price begins to stabilize and move sideways at low levels before gradually recovering and approaching previous highs. This structure indicates that the negative sentiment in the market is gradually dissipating and that buyers are beginning to regain strength. Upon examining the chart in question, it is evident that the price movement is forming a cup pattern in a relatively orderly and symmetrical manner. From a technical analysis perspective, this cup formation is considered a highly promising development, as such patterns often signal the beginning of a strong upward move. Analyzing the path the price has taken while forming this pattern, it can be seen that there was first a sharp pullback, followed by a horizontal movement in a defined bottom region, and eventually an upward move began. This suggests that selling pressure in the market has weakened over time and that investor confidence is returning. The upward move seen in the second half of the formation, in particular, indicates that buying pressure is gaining strength and that there is renewed potential for a market rally. This cup formation is also regarded in technical analysis as a continuation pattern, and once the formation is completed, meaning the price reaches the starting point of the cup or the highest level before the cup began forming, it is generally expected to rise by an amount equal to the depth of the cup. In this context, if the price in the current chart structure reaches the target, a potential increase of around 3 times can be projected. This creates a very attractive profit expectation for investors. Such patterns carry substantial potential, especially for long-term investors, as the formation itself reflects a phase of market stabilization and the foundation of a healthy upward structure. The volume behavior observed in the middle of the formation also supports the bullish scenario. Typically, in cup formations, volume decreases near the bottom, indicating that the market is calming and that sellers are becoming exhausted. However, as the second half of the cup develops and the price starts to rise, volume begins to increase, reflecting renewed buying interest. This behavior is clearly observed in the current chart as well. Volume is gradually increasing and supporting the price's upward movement. When the price reaches the neckline of the formation, i.e. the cup's peak, it is considered a technical breakout signal. If this level is broken to the upside with significant volume, the price is expected to move rapidly toward the target zone of the formation. The target level is calculated by taking the distance from the bottom of the cup to the peak and adding it to the peak level. In this case, analysis of the current structure suggests that if the price reaches this target, it may experience an increase of approximately 200 to 300%. This creates a very strong opportunity for both short-term and medium to long-term investors. The functionality of these kinds of formations is closely tied to market psychology. The left side of the cup often represents a period of panic selling and fear. The bottom area reflects hesitation and uncertainty, where investors wonder whether the downtrend has ended or if another drop is imminent. However, as the price begins to rise, market participants gain confidence, which leads to stronger upward movement. This psychological effect becomes more pronounced when the upper boundary of the formation is broken. Such a breakout is seen as a major signal in technical analysis and often supports buy decisions among investors. Cup formations are also typically seen as precursors to rallies backed by solid fundamentals. As a result, the price movements within the formation are both technically reassuring and psychologically supportive for investors. At this stage, the most critical factor to consider is whether the breakout that comes after the cup completes is genuine. Volume analysis is essential for this determination. Breakouts not backed by sufficient volume are often non-sustainable and may result in the price falling back into the cup. However, in the current situation, the price movement appears to be supported by volume and the upward move seems steady. This increases the likelihood that the breakout will be lasting. In conclusion, a strong cup formation appears to be forming from a technical analysis standpoint, and the price is advancing confidently toward the targets suggested by this pattern. Such formations present major profit opportunities for investors. If the price reaches the peak level of the cup and breaks through it with strong volume, it is highly likely that it will reach the projected target levels. This means the price could increase by 200 to 300%. When the technical details of the formation, volume activity, and market psychology are evaluated together, it becomes clear that this structure presents a positive signal and a viable opportunity for investors. The fact that the formation is developing solidly and remains structurally intact further strengthens this scenario. From a technical perspective, this cup formation paints a highly favorable picture and could be an indicator of a potential upward move.
The RSI indicator is a highly critical tool for analyzing whether the price has reached overbought or oversold levels, especially in understanding the direction and strength of momentum in the markets. Upon closely examining the chart, it is observed that the RSI has repeatedly found support at a certain level in the past, reversing its downward movements and bouncing upward from this region. These levels are considered strong support zones in technical analysis and represent areas where investors frequently take positions and where the price or indicator tends to reverse direction. Currently, the RSI value is seen to be very close to this historically strong buying zone, which may signal an impending potential reversal. In such regions, analyzing RSI's past behavior and assuming that similar reactions could occur again is often considered a reasonable strategy, especially if strong upward moves have occurred from the same level previously. That area may become a psychologically safe entry point for investors. In these cases, the RSI returning to that zone could trigger an upward price reaction driven by new investors mimicking past behavior. Additionally, a bounce in the RSI from this zone strengthens the possibility that the market has bottomed and a new upward wave may be beginning. During past rebounds from this lower RSI level, the price also tended to gain significant momentum. This shows that not only did the RSI reverse direction at these levels, but strong upward price movements also followed in close correlation. Therefore, it would not be surprising to see a similar move if the RSI revisits that same level. In this context, the current RSI level is being closely monitored by investors, and a potential bounce from this zone is seen as a highly positive technical signal. It's important to remember that RSI reactions from such support zones can lead not only to short-term upward movements, but also to strong trend reversals over longer time frames. Especially in past cases where the RSI bounced from the same level and moved from the oversold region to neutral or overbought territory, significant price rallies with large volumes followed, creating major market tops. Considering this historical performance, the RSI's current position may mark a critical technical breakout or reversal point. Additionally, a slight upward move from this RSI level could lead the price to revisit previous resistance zones. These kinds of RSI reactions often coincide with the formation of bottoming patterns on the price chart. In particular, in patterns such as double bottoms or triple bottoms, an RSI bounce from lower levels serves as a strong confirmation signal for investors. Furthermore, if the RSI starts to rise again from this level, it increases the likelihood that the price may not only give a short-term reaction, but also enter a new upward trend. A bounce in RSI from this zone also plays a significant role in restoring confidence for both short and medium-term investors. Because the RSI is especially useful for offering clues about whether a trend will continue, a renewed upward move from this support level suggests that buyers are becoming active again and that the market is gaining upward momentum. This can lead the price to target higher levels overall. From an investor psychology perspective, RSI reactions from lower levels are also considered quite significant. In these cases, investors often enter the market with a buy the dip mindset. This psychological factor can create additional buying pressure and accelerate the price increase. A rise in price following an RSI bounce from a support zone also confirms that this level is perceived as a strong buy area by market participants. Therefore, if the price revisits this zone again, it's highly likely that buyers will step in once more. Considering all these technical and psychological analysis factors, the fact that the RSI is currently positioned in a lower zone and has shown similar upward reactions from this level in the past lays a strong technical foundation for potential positive price movement in the near future. If this level is tested again and followed by an upward move, a new window of opportunity could open for investors. Especially if the price begins a high-volume upward move in line with these signals, this would further validate the reliability and significance of the RSI signal. This would serve as a strong positive indicator both for technical analysts and for the broader investor base. When the RSI rises, the price also tends to rise.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon!